Hey there, guys. Wow, Bitcoin USD. So, a bit of a misread on my side, a bit late to flex onto this one. We're getting more and more of this on the cryptos. There's a slight nuance to every market in terms of HVF theory, and it's taking a while for me to appreciate this. Long and short of it is, I think tonight, being currently 02:21 in the morning, we are likely to have a run of the high, I believe. We are so close. We've gone virtually parabolic and we're having a little thought. I think this is going to jink down and then run. So actually there is HVF structure, but it's very disproportionate. And we've seen a few of these. We've seen this on Ethereum as well. So here we have our 61.8 fib, and we have the small, which typically in equities, indices, and other markets I would treat as an independent HVF structure, separate to this macro huge target generated by this 30%, as I called it, a 1987 crash that was over in a few days and well on the way to recovery in less than a week. So everything in crypto is turbocharged. Time is dog years times 10x times 7x times whatever you want to call it. Anyway, so this little structure was very neatly sat on the 61.8, and you got a perfect little primer. This is golden mean stuff all over again. You got your pop, you just ran, you got your bull flag there in small scale, then you ran your target, then you ended up in a 2-layer bull flag continuation. So just on typical basic technical analysis involving flags, from when you officially ran, you could take it from the 3 low, slightly more conservative to there. You get a up leg that is that, and then you get the next up leg, which would be this, which we would arguably have just run. So I'll take that line and re-square that. If we were taking it from this low 2, which might be fairly sane, you would have a little bit more on it and it might be closer to this target. The other key element is that's very close to the high, the current all-time high, which on Bitstamp was 2759. On other exchanges it was 28, some it wasn't even that high. So remember that there's variations within the exchanges. So this micro HVF, in relation to this, typically we disallow for disproportionality in terms of combining the two and combining this huge macro target with this access level that was agreed. But this was your line of agreement here, roughly a 2,400 level on your 61.8 golden mean. You've had a very good bull flag with a very moderated pullback. We were slow to pick up that was perfect after the first interim. It's perfect after the first target, after you made the target of the smaller element. And then, of course, there's the small matter of this macro amplitude generated from your H1 to your L1 being projected from the same axis line, which, unsurprisingly, given you that your axis is just on the fib golden mean, takes you to the target level of the 1.618. Right up well through 33.18. We've got it at 33.20, 32, all 3s and 2. So if we press on from here and run the high, I will then be biasing to, you want to be long Bitcoin, the big boss. Be long the boss. Why? Well, you've got to bear in mind the altcoins aren't performing when Bitcoin is running. And I've set the coin market cap here to Bitcoin so that Bitcoin is at naught. And you can see that outside of Monero, which is a terrible chart and having a little bit of a bump, and then these two Johnny-come-latelys in the top 20, right the way down to Steem. And this is also for, in the case of Steem, in the last 24 hours. Actually, if we had it for the last 6 hours or so, I reckon they would all be red. So what you've got here is Bitcoin outperforming any of the serious others, alternates, Ethereum, Ripple, NEM, and then you get into the Litecoins and the classics and the dashes, and we get ever more virtually trivial, not to say entirely trivial, but certainly not in the same category as Bitcoin. And in fact, if you go through the whole top 20, there are 4 coins, one at 1% higher, another one at 1% higher. So you have 2 other coins more than 1% more than Bitcoin. All the others are in negative. We've got, minus 14s, minus 11s. You've got Ethereum lagging by 7%. So this is melt up time for Bitcoin in terms of its progress. And yeah, it could pull back. I could be wrong, and we could get a second high, and we could get a very steep sell-off. So what would be the negation of this current hypothesis? Remember, we're just probability. We just keep switching to what becomes the new probability. And once we started to recognize that this was potentially a micro aspect of this larger structure, because we've got this extremely strong parabolic challenge, I would argue had more candle body time at these heights than you have here. You know, that were the top of all the candles there. The rest were just wicks. So this could turn into a small little pennant continuation and just run the necessary. So on balance of probabilities, we now revert to this being a likely run of the high because we are so close. It is probable, and you tend to get sucked near previous highs. There's a cluster of order. We call it the HVF law of order clustering. So there'll be support and resistance traders that'll be buyers at the takeout of that high, and there'll be potentially a void of orders just before because people will wait for it to confirm. So as a result, we can be sucked through there the minute we get a little bit closer. If that happens, we could move on. That doesn't mean it has to be closed super quick in a straight line, but there's a risk near the end of all major moves. You go melt up quick. You see you have pullbacks, then you go up. This was really quick. This was really quick in terms of being parabolic. So on balance of probabilities, that is looking like a possible new scenario, in which case Bitcoin is the one to hold. Let go of your Ether, let go of the others, and let it run to 3322 from these levels. A very handsome percentage return. You know, you're talking about $600 even from where we are, plus at least $600 on something that's $2,700 is pretty handsome. You divide by 3, you're going to have kind of 2 over 9 there. You're going to have a 1 over 4.5. It's pretty close to 25%, in between 25 and 20%. So you're on about 22.5% return. That's better than a kick in the backside on most days. That doesn't mean it'll happen overnight. I don't think it's going to be this straight all the way. You can see even these up legs have strong pullbacks and then go melt up. Even there, big move. How do we get proven incorrect on this? So what is the scenario and the invalidation level for this current hypothesis, which is a probability assessment? It's not a guarantee. It's not a prediction. We aren't marrying it. We're letting the price behavior tell us. If we have a run of the stop of this funnel, it is definitely over. And then we are into just a very high H2 with a possible down leg, and we revert back to that scenario. So I'm telling you where I'll be, subject to various actions. So the price behavior determines our view. This is all we do. We're probability modeling. We're not marrying a view. I don't want it to be so. I'm not making it be so. I'm not wishing it to be so. We'll let the market tell us what it's wanting to do. And in the event that it runs this, then I'm just calling this a high, relative high 2. And then we get a relative low 3. If we get really steep, you could eventually end up with something that could be a double top, and it could be a reversal. But reversals are low probability and not a high probability scenario at this juncture. Hence why I'm not delving in it in any great degree. So we bias to continuation because we're in a bull trend on the bigger time frames. If you need any reminding of that, allow me to just do that for you. And then rescale this chart just to give you a vaguest of ideas of where we are at. So there you go. That's all I want to say. Come and join us. We're going to probably be starting next week then our trading room time slots where you can come and be with me and chat to me live. I'll have a go-to meeting session live open. We'll have a morning session. We'll have an afternoon session. I've committed to at least 3 days, and I will ad hoc come on further more. So I'm always a guy who likes to under-promise and over-deliver. So you're likely to get more hours than that I'm putting forward. But I need to retain some flexibility in my lifestyle. So there might be one slow week every month. But even still, wherever I go, I have internet, and I love talking trading, and I love serving people that will love trading with me. So you'll get more than you promised. Get in touch regarding those details on Support at the Market Sniper. And in the meantime, probability scenario, keeping watch on your cryptos at 2:30 in the morning and wondering if it's going to go higher, and watching that little red candle turn into maybe a green candle as it sizes up this line. So expecting a new high on balance of probabilities. That's your call and shout. This is the first video for the crypto channel that I have set up. So I hope you enjoy it and look forward to speaking to you soon. Keep well, trade small, avoid the leverage.